Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on what is a nice and sunny and warm Monday morning, recording on a Monday morning. Joining me today from Wichita, Kansas, Director of Feed Foundations, Mr. Jake Kingsley, and from way down in Atlanta, Illinois, Director of Buyer Relations, Mr. Verl, No Doubt Prather. Team, how are we today?
Doing pretty well here this morning, Jim. How are you?
Doing very well. We were talking about the aligning of the sun here now that we're moving into fall, and it's also Monday morning. I'm trying to work with better lighting. Jake, you're starting to get hit now too, aren't you, buddy?
I might get a sunburn here, Paige. I'm going to have to pull the shade down a little bit.
This is all, we're experimenting with ring lights and different lines. Things are happening this morning. Burl, how are things way down in Atlanta, Illinois?
Doing good down here. I'm not having the same amount of light issues just yet, but take a peek at the end of the episode here and it might change pretty quickly.
That's right. Well, hopefully by the end of the episode, maybe some light bulbs go off in terms of some risk management and how to handle these markets. Before we do that, though, Paige, we're going to ask you to please kindly timestamp the broadcast because, again, it's Monday morning. We decided to wait until after the Friday WASDE report came out, let this market and ourselves digest this through the weekend, and then record here on Monday to kick off the week. So very excited about that. Let's take a quick look at the markets while they are open. We do have December corn. It is now down 3 cents at 4.27 after what was a very big Friday afternoon after the WASDE having that 4.30 settlement on Friday. So down 3 cents at the morning. We have D-Sweet up 4.5, so just slightly. We're at 5.28. Novi beans up 3.5 at 10.49 3/4. Novi beans really trying for that 10.50 mark. We did hit it just slightly here this morning before recording. And then December meal, that stubborn little byproduct, back down 130 per ton today at 287.30. So, Verl, digesting WASDE on Friday, I think the consensus initially was, hey, this is somewhat of a neutral report. I think the bears could say, you know what, I feel pretty good about this. We're going to raise some acreage. We're not going to cut yield back as much as maybe we were worried they would. Balance sheet still sits over 2 billion bushels. I think maybe the bulls are saying, well, hold on a second. We did cut yield, though, and there's more to come. We raised exports because we continue to move this stuff. And yet the market ultimately went in the bulls' favor and again ran up to that 430s level that we haven't seen here in a bit. So, Verl, what was your take on Friday's WASDE?
Yeah, we definitely got an interesting trade to follow, right? And I mean, that would have been a tough one to try to trade, even if you had the numbers ahead of time, right? Because I mean, all intensive purposes, a lot of the things that we saw or the changes that we saw on the corn balance sheet on Friday were well expected, as you kind of mentioned. I would argue, that the 1.4 million acre addition was probably to the high side of what folks had been looking for. But I mean, ever since the August WASDE report and the FSA certified acreage data that came out last month, folks had been kind of talking within the trade that corn acres were probably too low. Obviously, it's been no secret that corn export commitments have been incredibly strong lately. So, the bump of 100 million bushels in that category really didn't come as much of a surprise at all. One of the big takeaways for me, at least, was that this market must still be very skeptical about the 186.7 bushels an acre. And to be honest, right, locally, we've gotten a start on some corn acres over the last few weeks. There's going to be much more to come over the next week or so as guys kind of get deeper into the fields. And we've certainly had some high temps to help dry that stuff down a little bit more here this weekend. But it's been fairly disappointing on yields, and we've kind of failed to miss the numbers that we saw last year, at least regionally here.
Yeah, I think we're definitely in an interesting stretch here where, yeah, the market is now trying to determine, hey, we actually haven't really seen the bulk of harvest really get underway just yet in the Midwest. We're getting those preliminary rounds over the last week or two. But yeah, things are drying out for sure. I mean, the air is much different here. It feels like progress can be made. We had some big storms up here on Saturday. So I don't know if changed some folks' plans for at least a few days. But for the meantime, it feels like things could really kick into gear. But again, yeah, that yield number, the market remains, yeah, maybe a little suspicious that we might have some room to go below that 186.7 that the USDA gave us. Jake, as we look at this thing too, we've been talking a lot about what's the low, right? I mean, if we're going to step in on the feed buying side, were the lows established in August, and we look at different seasonalities. And I would say after Friday's report, for those of us that thought we could come back down and achieve a sub $4 number, at least on December delivery, left me a little uneasy over the weekend. It didn't leave me feeling as sick as it was watching my Bears play, which was sickening, but it did leave me a little uneasy watching this corn market and how it behaved Friday. So, Jake, what are your thoughts on that behavior?
Yeah, I mean, this corn market's certainly been a difficult one to figure out, and makes you wonder if we do have the lows pinned in here at this point. I will say that it feels like it should work lower at some point than it is trading right now, but just how low it goes is hard to say. Maybe that space is a little bit limited compared to what we thought, a few weeks ago, even with the size of the balance sheet that we've got out there. A lot of our folks on the dairy side of things are working with tighter margins than they had been dealing with even a month ago. While it's hard to step in and own a whole lot of corn at these levels, given the numbers that we're expecting on the production side, maybe we're not too far from getting a big chunk bought at this point. But I do think that if we go in and start buying now, you do have to be mindful and find a way to get inexpensive coverage on that would create flexibility to the downside should this market move lower kind of out of season. I think we saw a move last year, especially in the cash market after the first of the year when a bunch of that grain started to flush back out of the bins. So we would want to be in position to take advantage of something like that if we could as well. But certainly needing to manage some risk and keep flexibility in play as on-farm margins get a little bit tighter for these producers.
And Jake, I think also going into the weekend, and something kind of was not major headline for us, but there is a US and Chinese delegation, I believe, meeting in Europe over the past handful of days. I think they started on Friday, moving through today. So perhaps also some de-risking heading into the weekend of maybe hoping, something could be done between the US and China. And I think something that we've talked about a lot lately is that for corn, that's not a big corn story, if you will, right? If we work something out with China, most likely something to do with soybeans, and yet we raised exports, right? We're looking at record export numbers for corn, and we trimmed those soybean exports a bit. I think one could argue because of the lack of activity with China. And yet we see Novi beans trying to push 1050. So I think that element is very interesting. Jake, have we seen anything basis wise impacted at various, either the export side of things or at the destination markets here in the US that makes you want to take any action?
Yeah, I'll let Verl kind of talk about maybe what you're seeing on the river as far as corn goes. But yeah, basis values in these destination feed markets here domestically have been under pressure. They've been feeling what I would call biddable, meaning prices are attractive, but if you take a number to your vendor and say, hey, I'll buy it if it gets down here, they're more apt now than they had been a month or two ago to come down and meet your bid. And I think that is a result of these rallies we've had in futures, right? We're closer to harvest. Prices are a little bit better for the grain producer, and they're taking advantage of it. I think, Verl, you've seen that on your side where grain is starting to either move physically off the farm or trade on paper to these elevators for future delivery. And that's helping out basis values and these destination markets. So opportunity there as a feed buyer to start working on the basis and cash side of this thing, and then take the futures if we can get a little breakdown there at a later date.
Bro, what have you been seeing on your side in terms of the grain sellers?
Yeah, I agree. A lot of folks, it feels like, are doing a little bit of catch up sales in this most recent rally on Friday, getting some additional bushels priced, especially those that they don't necessarily have room for on the farm and they have to move here at harvest. To Jake's point, on the river, we've had great demand at the Gulf, and we've actually seen Gulf basis increase for corn specifically, but barge freight has largely kind of offset, right? And so river destinations or terminals in the Midwest are fairly flat for corn basis so far, or here as of late at least. So that'll be interesting to keep watching going forward. I would note that Mississippi River levels are kind of top of conversation when it comes to some of those terminals, right? Because we're all watching Memphis and South, and obviously we're approaching some very low levels, which will start to affect barge drafts. And so that increases barge freight rates as well.
Okay. Verl, have you also, as we look at soybeans, I guess in particular, and, from the feed side of this, we're always watching how it impacts soybean meal and its impact on, protein pricing. And we know that the USDA did raise crush usage. So we have arguably more meal on hand, although our exports for meal remain very strong. Meal itself largely remaining under some pressure. It did get some activity on Friday, but still back under this, 290 level, hanging out in the 280s. But no beans, even though we lowered exports, but we raised ending stocks. We're back at 300 million bushels on soybeans for ending stocks, kind of a psychological level there. But beans are trying to regain some of their strength at least. Are you seeing activity on the soybean side that says if we get through 1050, next stop is $11, or is this just a temporary bump?
Oh, that's a great question, right? I think there's two sides of this soybean trade that folks are watching very, very closely. One being China. You already kind of mentioned that. And right now, while we did see a small 20 million bushel reduction to export estimates from the USDA on Friday, that number could be expanded significantly if we don't see China come to the US market. And, oh, by the way, it's already mid September, and our window for exporting soybeans out of this country to a large degree is not shutting just yet, but it's getting shorter and shorter as we speak. And so we need to see China come to the market and come to the market quick to the US. And then additionally, on the other edge of the spectrum, I think that folks are still looking at this yield number just as they are on corn and saying, hey, is this really realistic? Unfortunately, the Midwest, especially east of the Mississippi, did not have an abundance of rain in the month of August. And so we'll have to see, how that affected the top end of this crop. All in all, though, I think if we get well above this 1050 mark, which we're kind of fighting with here today, 1080 is kind of the next line of resistance that a monthly chart is very significant.
There's certainly a lot of things impacting, right, the forecast moving forward. I think the big one that you both touched on is that, how was August in terms of getting enough precip? And Verl, you noted that essentially dividing line of the Mississippi River. Again, we have not really started harvesting this thing in full force. You would think that's happening imminently, right? Depending on who got some of these weekend storms versus who did not. This could be happening quickly. So I think the market's trying to determine what are these actual yields going to be, because that appears to be the wild card for us. We settled the acreage question. We're still wondering about exports here and there, depending on the product. But yield's the big variable, and I think could determine whether we make another run lower or not as we push forward for the next couple of weeks. Let's do a bold prediction here before we wrap up, because we're going to borrow this again from Phil and Kathleen on the Dairy Download podcast. Bold predictions on December corn. As we record on Monday at 10 a.m., D's corn is down 3.5. It's at 426.5. Let's start with a wide range. Jake, D's corn, $4.50 or $4. Which do we trade first? Or I'll give you the we don't trade either.
Oh, man. I could go for the don't trade either, but I'll say $4.
$4. Okay. And it's a big range. 50 cents these days is a big range. So, Verl, what are you thinking? $4, $4.50, or neither?
Yeah, I'm gonna go with neither on that. I do think we've got to finish our business up here at 432. There's still a gap on the chart there from early July. So then maybe a magnet for this market, but I don't know that we have a whole lot of reason to go much above that at this point, at least.
Sure. And I think that is the one thing that the bulls, regardless maybe of how just bullish you might try to be here, yeah, what is that upside potential in this market? So there is also a gap that we have not filled on the Dees corn charts, like 432 3/4. We got very close to it. So let's narrow this range, Verl. Let's say 435 or 415.
I'd take 435 on that.
Okay, yeah, that was quick. That was immediate. All right, Jake, narrower range. So truly a bold prediction here. 435 or 415.
Man, I guess I'll go the other way. I feel like if they were going to go up and get 35, it would have been Friday or this morning, and it doesn't look like we want to do it right now.
Okay, we're just in a different ball game here where the commodities run in cycles. We are currently on this, under pressured cycle, if you will, for the corn market. So yeah, 50 cents might be aggressive in terms of thinking about this. Things get more interesting when it's 20 cents. So we'll see how this thing behaves. But in the meantime, gentlemen, thank you both for being here. Jake, good work fixing the blinds. Things worked out.
Working hard here.
Well done. Verl, thanks for returning to the show. Always a pleasure.
Thanks for having me.
And we'd also like to thank the Everag Insights crew for their support. A big thanks to Paige for production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.